Welcome to Markets Plus, where leading experts from across BMO discuss factors shaping the markets, economy, industry sectors, and much more. Visit bmocm.com/Markets Plus for more episodes.
In this episode of Markets Plus, Alan Tannenbaum, CEO of BMO Capital Markets, joined a panel of industry experts at the 2026 Milken Global Conference to discuss the outlook for M&A and IPOs. Moderated by Kimberly Patillo de Cossard, co-head, Global M&A Practice for White & Case LLP, the conversation explored deal activity across market segments, access to capital amid geopolitical uncertainty, the re-emergence of IPOs as an exit path for private equity, and how clients are approaching AI-related investment opportunities. Let's take a listen.
All right. Good morning, everyone. Thank you for joining us this morning. And we have a great panel here today talking about M&A and IPOs. But let me just do a little bit of level setting before we start. We have in the first quarter, global deal value for M&A was about $1.6 trillion, which is up 8.8% from the prior 3 months and more than 50% year over year. We have healthy capital markets, we think, with some big announcements coming out. So let's talk about both of those topics, and let's talk about the headwinds, tailwinds, and all of the things that we're facing.
As we're at the Milken Conference and we have so many of our private equity friends and clients here, two themes. One, smaller cap M&A, very active, large cap, very active in public markets. We're seeing very good interest, activity levels, desire to transact. You're clearly seeing a bigger challenge in the mid-size and the mid-cap market in terms of being able to execute M&A. Things are slowing down. We have seen a bit of an impact from the geopolitical environment. Again, the desire to transact, the inevitability of transaction feels high, but we are seeing some delays and some of the uncertainty in financing markets. If you're not a public company that has access to either your own currency and stronger access to public markets, given what's going on in the private market. So access to capital is not as certain today as it was prior to some of the geopolitical events. The other item I think is important to note, and I feel like as we're talking about the IPO market, it's so easy to get carried away with the OpenAIs of the world. And it's going to be incredible to watch that journey, but we're really seeing strong health across the IPO market, which is encouraging. And as we engage, particularly again with our private equity clients, feel like there really is a strong pipeline there as well, that community has started to appreciate that as they're growing companies to a certain size where M&A is a less obvious exit, we're seeing the IPO channel as a more viable exit channel. And what we're encouraging our clients, and I think it's really resonating, is to start that process. Like, as you know, when PE-owned companies go public, in some cases, as much as 100% of the proceeds are used to pay down debt. And we're going to see that over the course of the next 12 months. But they're more open to beginning that process to monetize and exit their positions over a period of time, recognizing it will take not just months, but years. So seeing very good engagement and desire to transact both in the M&A and the IPO market, which is very encouraging to us as we think about the next 12 to 24 months.
So there was talk already, a lot of talk already, and at the conference more broadly about AI and tech. So you and I were talking about this in our own businesses, but I want to hear how you're talking to clients about that.
You know, before we get to our clients around AI, as I go back to our audience here, what we're seeing and what we're really directing our private equity clients is the incredible opportunity to facilitate this revolution, right? You touched on it, that it's the power generation, it's the infrastructure, it's the construction companies, it's the cement companies, it's the metals that are required to go in. We're seeing a whole ecosystem that, from our perspective, represents a very different risk profile that we're very comfortable with, that we're seeing our investors very comfortable with. Picking winners and losers in AI, very difficult. Figuring out who's going to build a data center, not that hard. Figuring out who's going to be literally putting in the electrical lines and supplying the power equipment, which is candidly not that high tech, but very profitable and great predictable businesses and the kinds of businesses that our clients love to own. we see that as the real opportunity for us from an investment and banking perspective around AI in terms of what the clients are doing. And I think that we're all struggling with how do we integrate these tools? How do we think about creating productivity gains for our existing teams? And then really trying to find either adjacencies or ways to leverage this technology to create whole new businesses for ourselves and new revenue streams, and working with our clients to understand where they're coming at and then thinking about it for our own businesses. So this is an incredibly exciting, interesting, challenging, and some days confounding environment, and trying to stay current with all of the resources that are being developed, the new companies that seem to be coming up every day, is creating new businesses out of this technology, and really also doing it in an environment from, you've got some very large banks here, right? That the number one priority for us is cybersecurity. The number one priority for us is data security. So putting those priorities first as we think about it, and candidly, even helping some of our clients leverage the work we're doing, because we have to be best in class in those elements, and helping them understand how to protect their data, how to protect their resources. So just a fascinating time.
So let me pan out for a minute. In the first quarter, there were slightly more deals outbound to Europe than inbound into the US, slightly more. Alan, what do you think about cross-border M&A, meaning outbound, in the year ahead?
We've seen some interesting trends. We definitely saw over the last 24 to 36 months more inbound interest, right?
Yeah.
A real desire to have exposure, candidly, to dollar assets, to U.S. assets. And it almost accelerated after the tariff dynamic, where the need to diversify your manufacturing, diversify your sourcing, diversify your currency exposure, definitely saw more of a trend to wanting to own U.S.-based assets from all over the world. It feels like that's just stabilized, right? We went from maybe the pendulum swinging too far to one direction, and now, given some of the geopolitical events of this year, and you've seen all of the leading public figures from outside, or some in North America, but certainly outside, talking about need to diversify supply chains, diversify partners. To me, that's just a natural reversion to a more global perspective, which hopefully is good in the long term. So I wouldn't necessarily draw it as a radical shift one direction or the other, just see it more as a normalization of what was an overemphasis perhaps of US-based assets.
We have about 1 minute left, so we're going to do a lightning round. What is the most compelling opportunity you see in the back half of 26 and into 27? Alan, last word to you.
Our theme is flexibility. The topic here is windows, and that's how we see the world, right? There's so much going on around volatility, geopolitics, that there's volatility in different asset classes across all of our markets, businesses, and it's impacting IPO markets, it's impacting the M&A market, and being flexible and adapting to those inputs and pursuing your objectives with those inputs. That's how we're going to get through the next year and capitalize on it.
All right. Wonderful. Right on time. Thank you all for a wonderful conversation. This was a great sit and chat. Thank you all for joining us, and have a great day.
Thank you.
Thanks for listening. You can follow this podcast on Apple Podcasts, Spotify, or your favorite podcast app. For more episodes, visit bmocm.com/marketsplus.
The views expressed here are those of the participants and may not necessarily represent those of BMO Capital Markets, its affiliates, or subsidiaries.
For BMO disclosures, please visit bmocm.com/podcast/disclaimer.